You're watching France 24, time for business. We say hello to Kate Moody.
Hi, Francois.
The debate that's been raging all day on this continent, the end of the bailout program for Athens, a milestone or not?
Exactly. It's a question we'll be asking in just a moment to an analyst who knows more about it than we do, certainly. The better part of a decade, though, living on borrowed money. Now Athens is being asked to stand on its own financial feet. The Greek government owes over 300 billion euros to its creditors, including the European Central Bank, European Commission and International Monetary Fund. That's close to 180% of its gross domestic product. Many Greeks, meanwhile, say they've been crushed by austerity measures imposed by those creditors and worry their fate won't improve once the lending program is officially over. Now, for more, we can cross to Thanos Vamvakidis, Managing Director and Head of Foreign Exchange Strategy at Bank of America Merrill Lynch. Thanks for being with us this evening. What do you think? Is today's exit from the bailout program the beginning of a new concrete chapter for Athens, or do you think it's mostly symbolic?
Definitely it is a new chapter for Greece after 8 years of being in an official adjustment program. Also, there are a lot of positive developments. The economy is finally showing some signs of a recovery, and there is enough liquidity so Greece can survive for at least 2 more years without market access. Moreover, the end of the program goes together with a deal on the debt, which buys enough time for Greece so that the country is not concerned about debt sustainability for now. Having said all that, there are still substantial long-term challenges that Greece will need to address.
Now, you mentioned that debt deal that EU creditors finally came to just earlier this summer. It essentially allows the government an extra 10 years or so for its repayment schedule. Do you really think that's enough to make the debt burden manageable and sustainable?
It buys time. It doesn't fully address the issue of the very large debt, but it gives enough time for Greece to implement reforms to increase potential growth. It is important to note that the official creditors are still quite pessimistic about the growth potential in Greece. So the IMF expects, for example, growth in the long term in Greece to be between 1 and 1.5%. In this case, the debt will remain unsustainable. If, however, Greece takes advantage of the time ahead and implements structural reforms to increase potential growth, then the debt can become sustainable in the long term.
What about investors? Do you think they're confident enough with the situation in Greece to put their money back there?
For now, yes, up to an extent. Greece has been a successful trade for investors. However, the main investor pool in Greece are still hedge funds, short-term investors. The country has not managed yet to attract real money, to attract greenfield investment. This is why from now on it is very important to focus more on structural reforms, to focus on improving the investment environment in order to attract investors with a longer-term commitment to Greece.
Now, you've also in the past worked for the International Monetary Fund, notably on a project that warns of possible economic and financial risks ahead of time. What do you think are the biggest risks currently facing the European Union?
Well, there are still substantial challenges. In a way, the Eurozone has managed to survive because of the ECB. So looking forward, as the ECB exits from QE policies, it will be much more difficult for Eurozone economies, particularly for peripheral economies as borrowing costs increase. For the EU more broader, definitely the Brexit negotiations ahead are very important. And finally, it is very important to progress more on the reforms that started during the crisis to move towards a closer union.
Is the Eurozone itself better prepared to support its member states and withstand such shocks than it was a decade ago?
It is better prepared to respond to crises. A lot of institutions were put together during the Eurozone crisis to strengthen the Eurozone during a difficult time. But I don't think the Eurozone is ready yet in order to avoid a crisis. Closer coordination of fiscal policy, banking union, these are reforms that have not been completed, and it is very important to focus on this policy agenda in the years ahead.
All right, Thanos Vamvakidis, thank you so much for your insight.
Thank you.
We just got time for a quick check on the day's trading action. Now, it was a positive close across the board here in Europe. Even the Athens Stock Exchange General Index managing a slight rise on its closing bell. Its overall value is still 60% below what it was before the first bailout was finalized back in 2010. Greek banks do remain the worst performers there. Meanwhile, the DAX rose nearly 1% in Frankfurt. The CAC count about 2/3 here in Paris. Shares of the luxury fashion brand Mulberry tumbled nearly 30% in London as it issued a profit warning linked to the collapse of the department store House of Fraser. And that's all for now. Francois will be back later on with another check of the top business stories today.
All right. Many thanks for that, Kate Moody. It's